Good afternoon, everybody, and welcome to Les Salons for our first live session of the season of Learning from Leaders. Today, we have the pleasure to welcome the full Syz family. And as you might know, the topics they will be discussing today are really close to my heart. They will be talking about family business and innovation. And obviously, as always, if you have been following the Learning from Leaders series, we have the great pleasure to have Peter Van Am. Messieurs, enjoy the conference.
Thank you so much. Well, it's a real pleasure to be back in Geneva and to welcome you all in person, all of you, and of course everyone who's joining us live online. I hope that we're going to get this right because I hear a little bit of a mic echo. That's of course what you get when you bring people together in person again. You know, when you were on Zoom, that was never going to be an issue. So I hope that we can resolve that if necessary. But in any case, it's a real pleasure to be back in person. And we've got a fantastic event for you today with actually 3 members of the same family who, it turns out, have actually never been together on stage. So that is a fantastic scoop that we're getting here. And it's 3 members of the Syz family. It's a family that's been around, if I understand correctly, since 1534 in
Something like that, yeah.
That's
Zurich, yeah.
a long
as
time.
far back as we can track.
Yeah, so I guess it's normal that any of us would not have been able to meet any other family members. They've been around for 500 years in this country. And what they've done over time, we will discover. But we first want to talk about something very much in the news. And I'm going to turn first to Nicolas. Nicolas, because you've decided with your father and brother to set up a crypto activity with the bank just at the time that the prices of crypto fell by 80% and the largest crypto exchange went bankrupt. What a great business idea.
Well, you know, running after a trend is never the right idea. So it was, it really, the project started really as we were, talking to a lot of clients a couple of years back, and it came from client demand. Clients wanted to trade, wanted to book assets with us in cryptocurrencies. And so, being at the heart, innovators, entrepreneurs, we looked at this and said, okay, this is an opportunity, while seeing that the DeFi world was taking,
DeFi, decentralized finance.
Decentralized finance world was going to have a big impact in the financial world, and it's growing. We said, listen, let's get a foot in that, support our clients, provide service, and build a bridge between those 2 worlds, and that's how we went along and launched that last year.
So you've started now this crypto offering with the group, the bank, because Syz is many things: a family, it's a business group, a bank, and so you're offering crypto services to your clients. What does that actually mean?
So crypto services, we're offering these safeguard, so custody of the crypto assets.
You provide a safe. People can put their crypto coins in a safe.
Yeah, so it's the safekeeping of digital assets is a little bit different than the safekeeping of financial assets, but there's basically a system and a technology to do the custody of the assets. And for the technology part, we chose a partner which is called Taurus. They're based here in Geneva, and they allow us to
I know them from some YouTube ads.
Yeah, well, they're very good at what they do. So it allows us to really provide the best sort of service on the tech part, while as the custodian is more about the process of due diligence, the process of risk management. And that's where, that's our DNA, that's what we do. We're a highly regulated industry in the financial world. So it allows us to put an additional layer of safekeeping for the assets.
Because that's important, of course. When you have cryptocurrencies, they can be stolen if they're not stored in a safe place.
Yeah.
But as we've seen with the default of the largest cryptocurrency operator, FTX, it can also be that the operator itself takes some of the crypto coins. And so is that then your added value, your unique value proposition, that you're like, you're safe with us because we're a Swiss bank, and so keep your crypto with us?
Well, there's two formalities, but as a regulated entity, you need basically to have a strong balance sheet, which is an extra layer of backing assets, for clients.
That's what every bank has to do, right?
Yes.
This is sort of the regulations where you get money from your clients, and of course you're going to lend it out. That's what a bank does. But according to the regulations, you have to make sure you have a reserve of money on your bank account. But that's not how crypto works, does it?
No. That's not how crypto works. But it gives additional security that there is something behind that's solid.
There are some assets
whereas
in the bank.
FTX is not regulated. Those platforms aren't regulated in the same way, where our industry is much more regulated. And in addition, you can't just walk away with, we have a process of key ceremony, which allows you to actually, you can't just walk away with the assets. There's a protocol which safeguards the assets in a very strict way.
Yeah. So, and I suppose that right now people have come to understand just how important that is in the crypto world. I want to turn to you, Marc, because Syz, as I said, is not just a bank. It also offers other financial services. Tell us about the financial services that you look after, in particular when it comes to crypto.
So we do a lot of things. Mainly I look after alternative investments because we think it's an alternative way to generate better risk rewards or better performance for clients. And one of the asset classes which is on a lot of people's top of minds is obviously digital assets or cryptocurrencies. And as we've seen recently, there's been a lot of volatility, but a lot of volatility also means a lot of opportunities.
Right.
And so how do you actually extract...
Because, of course, the idea is with volatility, which, of course, is, in this case, a euphemism for the market going down, but you say what goes down must also come back up. That's the opportunity part.
No, absolutely. And you have had years like in 2021 where Bitcoin took over, 150%, right? So you do have a lot of volatility in those markets. And in order to take advantage of those, in our industry or the traditional alternative investment management industry.
Okay, hold on. You gotta, because alternative investments. Hold on. What's
so you have traditional investments, which is investing in stocks and bonds and things. Probably most of you, especially if you're finance majors, would know what those are.
You got me. Okay, that's fine. I know what a stock is. I know what a bond is. That's traditional. Alternative.
So alternative is basically something which is by definition not traditional, right? So to make it easy, it is something which could be, either a derivative of a traditional asset by the definition of sense, or something where you go into something which you can even say real assets. So, real estate, for most of you, probably that, is considered as an alternative asset.
Is an NFT, a digital painting, is that considered an alternative
Absolutely.
asset?
Absolutely. It is not, tradable necessarily. It doesn't fall into the same, I would say, traditional investment boxes as alternative assets would, such as NFTs or cryptocurrencies or therefore digital assets.
And which of those in the crypto world do you think are most interesting and therefore are you going to be offering?
I have no idea because if I knew, we would already be very rich. And the reality is we have no idea today where digital assets nor cryptocurrencies or any derivative of that or NFTs or any kind of DeFi solution is actually going to go. And simply because it's early days. Like I could not tell you, 200 years ago or when we had the first couple of stock markets where actually stocks would even go. And I think we're in the same situation today. I think the technology behind what we call digital assets or blockchain has actually a real value add, has true value. You can apply it to a lot of industries. But a lot of that which has come towards investable assets, as you could call them, there's been a lot of hype around it and no real application. So what we try to take advantage of is to say, well, there's been a lot of volatility, in that market. A lot of clients are looking to invest, but they don't know how, and they're quite afraid. So we try to take our hat on, again, we're alternative investment specialists, which means trying to take advantage and looking at better ways to invest, and looking at that asset class and extracting what we call, in our jargon, alpha, which is performance, and profiting from that volatility. And to make it, simple for you to explain, is we're saying, well, if there is a lot of volatility and Bitcoin and digital assets are going up and down, well, we should be able to make money both in an up market as well as in a down market.
Right.
And that is practically what we're trying to offer our clients, a safe way to invest in digital assets by not undergoing any volatility and losing your shirt and losing 100% in a given year because there's some kind of collapse.
Yeah,
and so we're now launching those kind of products to basically extract value from that market where you're completely uncorrelated and non-directional. So it doesn't matter whether you have Bitcoin or Ether, any kind of digital asset or NFT, whatsoever is going up or down. For us, what matters is that the volatility continues, and we're going to be able to extract value from that.
Okay. And so when will you know what you're actually going to invest in when it comes to crypto? Should I ask you in 3 months, 6 months, a year from now, 2 years?
It doesn't matter. For us, what matters is the market can continue to grow, and actually it's good that it's going to continue to grow.
But what you said earlier on, I don't know yet what I'm going to be investing in or what product I'm going to offer. When will you know what products you will offer?
No, we know what product we will offer. So for example, to make it very simple, we will have a situation where we can basically go both what we call long or invest into Bitcoin as well as short at the same time. I could, for example, say, well, it's a bit like trade at the time. If you're sitting in one area of the world and I was sitting in the other, 400 years ago, the price for, I would say, a same commodity is not the same, even though it's the same.
That's right.
And it is the same here in this circumstance because we're still at the very early stages of a new industry which nobody really knows where it's going. So there's things in our jargon, again, for you, some of your finance major will know what it means, is arbitrage, or being able to say, well, I'm going to buy something from you or a digital coin at a price A, and I'm going to sell it on the other side at a price B, right? Yeah. And make basically a spread. So for us, what matters is to say, as long as there's volatility, as long as there's a lot of speculation in that market, there's a way to extract value without taking a directional risk.
Got it. So now I want to know, because in the case you didn't know this yet, Nicolas and Marc are actually brothers, and their father is sitting right in the middle. And he's listening to all of this, and he's thinking, actually, what are you thinking now?
What a mess have I created.
What am I thinking? I'm thinking that if we take it on cryptocurrencies, it is, I've seen this before, just in a different market. So to give you students here some perspective, which shows you how the world changes slow or fast for you to judge. What they're trying to do in crypto is the same thing that I did when I was in the late 70s, early 80s in New York. We used to buy AT&T, which is American Telephone and Telephone,
right.
At the time at $20 in New York and selling it at $22 in Zurich. With a phone call, with the $2 spread. And the next day we would do the other way around. Until
so much easier
my
at the time.
chairman...
Right.
It's become harder.
Placing calls versus trading crypto.
And it was an easy thing to do. The problem was, how do we settle that? Because the stocks were quoted in New York, and there was a dual listing in Switzerland, and it was an administrative nightmare to unbundle these trades.
Just to be straight, that it was a nightmare because, obviously you didn't have a phone, you didn't even have a laptop. You maybe had a mainframe, and was that mainframe even connected to? No, it wasn't, because there was no internet.
Exactly. And so what happened is that it became such a nightmare that the chairman one day came to my office and said, look, Eric, you got to stop this. We're making a lot of money, but we can't unbundle these trades anymore.
Right.
It's too much work. In today's world, that's unthinkable that this would happen. And the AT&T shares between New York and Zurich trade at probably less than 1 cent of a spread. So that trade is gone. And if you want to trade that, you need very fast, super high fast lines with supercomputers, so you can actually get that one spread.
Yeah. So in other words,
and that is what happens now in this new asset class, where you got this arbitrage where some people pay more in one place of the world than in another, and you just take it from one place to the other. It's complex, it's complicated, but that is why there's a spread, and that is why you can make money.
Yeah. And so for you, you're like, well, it may be all a whole new brave world, but I've seen this before. Another technology, another era, but I've seen this before. And so that's why you're okay to put the legacy of 500 years of the Syz Group now into the hands, not just of your sons, but specifically in a crypto venture.
Yeah, absolutely. Yeah, because I said, look, it's just a different material. It's instead of stocks, it's crypto, but it's the same principle. So and it has worked in the past, and it's probably going to continue to work in the future, and in 20 years from now, it's going to be something else.
We can also go back much further in time. Your family has been around for many generations. Could you tell us a little bit about the broader background of your family, and then why you decided at some point to create the Syz Group and the Syz Bank?
Okay, so yeah, as you said, the family goes back for a long time. We, like all the Swiss, were mountain peasants and, going about our business. And then in the early 19th century, when industrialization started
when trains came to Switzerland, when machines came.
Exactly. I mean, that was sort of, let's call it 10, 20. The Swiss were very strong in textiles. And during that period, my families, from my mother's and my father's side, were involved in textile. And that was like today's technology industry. And everybody needed textiles, and the Swiss were very strong with the Germans in producing, on one hand, textiles, but also the textile machinery was produced in Switzerland. That then led, and there was really no stock market, or very little, as Marc said before, to us investing in other businesses, starting other businesses. It was like venture capital. There was nothing. You just had to start everything from scratch. And we started a lot of businesses, most of which have disappeared, because that's what venture capital is all about.
Some of them survived, yeah?
Some of them survived. One was Credit Suisse that survived. Unfortunately, it's not any longer what it was, as you've probably read from the newspapers, but that's one of survived, and we founded with 5 other families. And another one was Zurich Insurance Company. And so, fast forward to, the 20th century, my father was the last one of the family to have a textile business. We either closed all our textile businesses, or they were taken away from us during the wars and revolutions, or we sold them. And so he said to we were 4 boys at home, and he said, look, you can do anything you want, but you cannot go into textiles. Because by that time, the machines were everywhere in the world the same, but rather than producing in Switzerland, you were producing in Vietnam. And in Vietnam, of course, you can imagine, labor is much cheaper, so there was just no way you could compete against that labor.
So you had to decide now, okay, I can't do textile like my family's done for the last 150 years, so what am I going to do? And you said, well, we're in Switzerland, I'm going to create a bank? Is that as simple as it is?
Not quite, but almost, yeah, quite. So what I did is, as I walked out of school, I did something that you all don't do, and I should have done what you do, but I didn't. I was supposed to go to university. And before going to university, I worked in a bank for 11 months. And I said, this is a great, I actually like this. I like this private bank. And I said, well, one day I'd like to have a bank like that. Then I went to the army, broke my neck in the army, and I was very lucky not to be paralyzed. And rather than going to study, actually I studied just one day at London School of Economics, I moved to the US and started to work. So I was very lucky because as a young man, I knew what I really wanted to do in life. I really knew. And when I told my kids, I said, look, it's very seldom that at the age 19 or 20, you know what you want to do. So buy yourself intelligent time and study, because that gives you, a broader perspective.
But to be clear, what you wanted to be at 19 was to be a banker.
Yeah.
And where did that come from?
I don't know. I just walked into that bank, and when I walked out, I said, I like this business. Given that I couldn't be in the textile business, I would have loved to be in the textile business and produce something. And my father said no, and I really like that business. I like the idea of investing in companies. So that is, and then the rest is, history.
So you ultimately then create a bank. Of course, you have the legacy of your family, I suppose some wealth behind you, so you can actually start up a bank. But it's not because you start a bank that your bank is going to be successful. What made your bank stand out from any other Swiss bank?
Well, I think what we did differently at the time is, to put this into context for you all, what the Swiss were doing is they basically, the typical Swiss private bank or the large banks, the UBS and the Credit Suisses of this world, they were offering bank secrecy. And this is a little bit like if you're running a hotel and your USP is to offer beautiful view and fresh air.
Yeah, it's like USP, of course, being unique selling proposition. But you're like, okay, beautiful view, fresh air, great, check. But there's more to a hotel experience than that.
Well, I came back from the United States, worked for a large private bank here, and I said to them, look, we need to offer more to our clients, just in the bank secrecy. And it was a very tough discussion because they just didn't understand. The clients would just walk in with their money. And after 10 years of battling, I said, I'm going to go on my own. And I'm just going to go out there and offer something which for me was my own need, is to have good and solid asset management. Yeah. And I couldn't find that with my own money that I had at the time, a bank where I would, with the knowledge I had, give my money to be managed.
Yeah. And of course, for people that are perhaps clients of the private bank, now it sounds, again, like the equivalent of having fresh air and a beautiful view, asset management as offered by a bank. But at the time, of course, it wasn't.
It wasn't, and we just offered three things: dollars, euros, and Deutschmark. No, sorry, you didn't get it. Deutschmark, dollars, and Swiss franc, and three different profiles: on the high, and the medium, and the low. And that was it.
Right.
No credit cards, no loans, nothing else. And we managed our clients' money the same way we managed our own money. And that was unheard of at the time.
Yeah. And so I can see, of course, that it's been successful because so many decades on, you're still around. But of course, your family, if you then go back all those generations, your family, in fact, every generation had to reinvent itself. Is there a lesson there beyond your family about anyone, really, any family in any generation, sort of the value of reinventing yourself and the reward for taking that risk?
Yes, I think what is important, if I look at it from my family, why did they create Credit Suisse? They were industrialists. They wanted to have a commercial bank. And they said, we don't have a good commercial bank. Let's found one for our own need. Because if we need it, someone else will probably need it as well. Zurich Insurance Company was the same thing. We needed insurance to insure industrial goods, buildings, and so on and so forth. There was no really insurance company that convinced us. And so we went out and said, let's start an insurance company.
And it was called actually the, Swiss Textile Insurance Company at the time, before it was even called Zurich.
Which shows, of course, that at the same time, the family reinvented itself, but also sort of built on the legacy of the past. I want to turn again to you, Marc, and in the meanwhile, just another note for the audio department. If you feel like we all should go to the microphone, we can also do that so that you don't feel jealous. Just give us a sign. Marc, so, all right, so your father built this bank, I'm sure very successfully, but with a lot of challenges as well. And so you come onto the labor market a couple of decades later, and I would think, well, then obviously you're going to support your father and work at your father's bank. But you didn't do that, did you?
No, I was always interested in finance. I mean, I would see it at home and all of that. And I thought it was fascinating because every day you'd get up and, things would change and whatever framework, they throw at you. And for those of you who studied economics, the ceteris paribus principle doesn't work in finance, which I thought was very, very intriguing. And so I went into finance. I worked first for an investment bank and then another private bank here, always on the investment side of things. So in investing into various instruments, traditional assets and then non-traditional assets, so alternatives.
And that was the reason why you didn't immediately start at Syz, because of course your father was doing asset management, not investment. Is that right?
No, he was doing asset management. They were doing alternatives. But I also, at the time, what I was fascinated was by markets, and so I started my career as a trader. So that's how I got to go into finance. And it was not that I said, oh, I absolutely want to come and work for my father. I think there's another element where if you want to really get good at something, you need to train with some of the best. And it's not that my father was running a what we call in our language prime broker investment house. He was really focusing on one thing and doing it extremely well. And I was interested in finance, and that's how I started. And I also think it is actually very healthy, and we see it. Obviously, we didn't know at the time what we know today, but it is very healthy also for good corporate governance reasons. if at any point you want to work in a family business, the fact that you have worked outside for a number of time, and you might never join a family business, it creates a much better, I would say, rapport. And as I mentioned, corporate governance, if you then integrate a family business, if you've worked outside. You just bring another, let's say, dimension of experience and respect for each other.
So I can see now why you went to work for another company at the beginning of your career, but then in the end you did come back. And it sounds to me a little bit like the story of the Odyssey, you know what I mean? Like you go on a big adventure when you're young, and then at the end you come back to the harbor. What was it like that for you? Did you just wanted to go back to your roots, or what made you come back to the family business and in fact create your own division in it?
Yeah, it was a bit also coincidence. So I left after being in London and then Switzerland. I left for Asia, where I spent 7 years, and it was fascinating and eye opening to see what growth can actually be and entail. And I was investing a lot in what we call private assets, or real companies, so non what we call listed companies, or any kind of private company or real estate. And I was doing that for a previous firm. And at one point, I was seeing that the paradigm was shifting again.
All right, the paradigm. Okay, so the paradigm meaning what's a paradigm really?
So the thing is like when you're used to a certain situation. My father did a nice analogy before, where he said, well, for so many years there's been banking secrecy. So of course, when for 200 years you have Swiss private banks who've made money just by saying, hey, we're Switzerland, and we're giving you a massive tax break. We don't have to do anything, but just come and we'll make money for you. At one point when that changes, the paradigm, the environment changes, and you need to kind of adapt if you just even want to survive.
Right. And so you saw the change, and then you said, I got to jump on that. I got to ride that wave.
Exactly. So back in 2017, with my current partner and former colleague where I was working, we were seeing that there was a big shift in the financial markets in terms of what was happening. Some of you or most of you probably won't remember that, but we had now a 30-year run, what we call bull market or positive market, just in fixed income. Most of you have never experienced inflation.
Super cycle.
We had a super cycle of basically just you're holding a fixed income and you didn't have to do anything. Just made money for 30 years. And that has now started to change. And when you've seen everything, it's a bit like, you read this in a history book, the tulip moment, or more recently, the Bitcoin moment, where you see things just going, stratospheric and things doubling, every month. At one point, this can continue. And we saw that and said, we need to do something different. And at the time, with my former partner, we were not really agreeing. And so we said, okay, I need to found my own company. And that's where we started talking. And we said, well, why don't we do something together?
Yeah. And so then you created what's now known as Syz Capital.
Correct.
Which is the alternative investment division, let's say, of the Syz Group.
Yes.
So, okay, so we got two parts of the equation here, and then I think there's a third one. Now we have Nicolas. And now I'm thinking, okay, so your father went to the bank at 19, your brother went to a bank a little later, but still. So you went also to the bank when you were 19?
No.
So where did you go?
I'm the strange one in this equation. But yeah, I wasn't. I studied in finance and banking.
So far so
good. And I took the advice of my father, which say, take time and fill your suitcase of knowledge.
Yeah, yeah.
And it was around sort of right a year after the financial crisis that I graduated from my master's.
Which is 2008. We got to say it because the average age here is 20.
Yeah.
So,
so 208. And it sort of rang a bell saying, well, do I really, is this an industry where I sort of, do I want to belong to this type of industry?
Right.
Because it was all about pushing a product and not caring about who buys it.
Yeah.
It's just,
from your perspective, that's what it was, right? A bit impersonal.
Very impersonal, so not a lot of interest for clients. And then I was attached very much to our history, which was, textiles, which is very much consumer-led. So I said, that's maybe an area where I would, as something concrete.
Maybe your grandfather wasn't around anymore, because he would have told you can't do that.
So I was wanting to be much
tangible.
more concrete, tangible, and so I went to Asia, and I worked in industry. So I was a big chemical company, family owned as well. They're based here in Switzerland, and I traveled with them all over the world, and Southeast Asia, but then came back to Europe as well with them, and it opened my eyes into what was missing in terms of how do you really focus on consumers and customers.
Yeah.
And then I sort of couple of things shifted, and it gives you a different perspective of how you see. We talked about added value and how you see your purpose, the added value you want to bring to a business. And the fact of having a business, which was founded by my father, I thought it's not every day you can actually say, well, we have a business and we can influence it and really give it another another facet. And that's when I sort of had the discussion with my father, saying, listen, actually there might be an angle which is not totally covered yet. And instead of bringing a much more product-led sort of perspective, I wanted to bring a much more consumer-led purpose to the organization, and so I went to another financial company a couple of years in Zurich, and then joined the family business.
And now we're all happy together here. What was your role in the end when you started at the bank? We now know you're in charge of the crypto venture.
So now I'm in charge of the wealth management, but I was basically doing business development on the Swiss entity, on the Swiss part for
talking a lot to clients.
Exactly.
So it's quite amazing, isn't it? Because now we got like this very quick overview, both of how a company can really play into the latest trends, and at the same time can be really steeped in history and legacy in many generations. And I feel like there's really a lot to learn here. I just want to ask you all some parting thoughts before we go to the audience. Would you say in your case, Nicolas, was it in the end destiny or serendipity that brought you back to the bank?
It's a big one, huh? But I mean, I guess you create your own opportunities. And I really believe that the more you create the opportunity, the more you create your own luck. The more you seize the opportunities, you create your sort of own path. But you need to you can't miss the moment that the opportunity passes.
Right.
And those opportunities lead to business, lead to partners in life. And I think it's about just being in the moment and seizing that opportunity. And I think this is what gave me the perspective I had to sort of feel at ease with the changes that led me then to the business. So,
can you relate to that? If I can ask you, because you of course felt that weight of your family history perhaps a little bit more, because it was so clear that you could not continue the family legacy. You had to start something new. Was it different for you at that point in time?
Yes and no. Yes, because I actually liked, like Nick said, produce something. On the other hand, I could see why my father said, look, this business has no future, and he was right. So he said, look, do anything else but this. And so I had the free liberty to do whatever I wanted, and again, went into finance, because my family has been a financier in finance for the Swiss, but this is 1865, so it's a way back, and we didn't really run or own the bank in that sense anymore. And I said, my kids is the same thing. I said, do whatever you want. So Marc chose to go into finance. Nicky said, finance over my dead body. I want to go and to do something real.
He's alive and well.
Yeah, and then, eventually, he said, well, actually, I quite like it. So I can sort of see, he said, I can now see where I can add value. And I think that goes back to your first question is, as an entrepreneur, you need to offer a service, a value, which we did when we started off, that you think brings something to the customer.
Right.
And adds value to the customer. And so Nicolas, when he came in, he said, look, I think I can really add value to this business, and it happens to be my family business.
Right. Now, you also said something about, earlier in our conversation, that there's really no point to just chase, business, or to just chase money or a title, or for that matter, I suppose, to just continue the family legacy. You also have to actually enjoy what you do. You have to have the passion for it. It's why you gave your sons that liberty, and you got that liberty from your father. But how do you balance that? I mean, if you have 500 years of history behind you, doesn't that automatically weigh on you to be like not the last one? That's sort of like, well, I followed my passion and I went to, I went to, I don't know, like swim in the lake, and now the money's gone, or and the whole family legacy is gone. I mean, like.
Well, it depends what you call legacy. Legacy has very different aspects. If I go swimming, I become an Olympic champion. That's a legacy too, right? So I think what is important when you start off your career is that you do something that you like, where you can put in a lot of energy. You don't count the hours, and you do it for the right reason. And the right reason cannot be, as we said earlier, become the CEO or make a lot of money. That is the result of what you do.
Right.
And, if you are good at sports, you say, okay, I want to win that race, and I want to win the next race, and I'm going to get better and better and better. And the result of this hard work is going to be that you have a chance to go to the Olympics. But you cannot say, I want to go to the Olympics, and I'm just going to, I'm entitled to go there.
Right.
And I think the entitlement question in the family business is very important.
Yeah.
If you don't feel entitled, that is already a very big step in the right direction.
Right. So you have that passion, but you also pursue that excellence, and then it doesn't matter if you continue the family legacy exactly as it was, or you give a new twist to it. And I think you've shown that, and your sons have shown that. Finally, to end with you, Marc, of course, you did have that idea earlier on of like, hey, growth in the finance industry is here, so I got to go there. And so it seems to me like you've chased that a little bit more than perhaps what we've heard before. How do you find the balance, and how did you find the balance between that pursuit of money and opportunities and growth, and then the passion and the excellence and finding your own path that your father talked about?
So I always did something I was passionate about. I mean, I would have not gone, and done crazy hours as a trading desk, sometimes pulling 24 hours if you're not passionate about something. No matter how much money you get. I do remember my father telling me once, I told him one of my first bonuses, like, this is ridiculous how much money they're paying you in an investment bank. That was pre-2008.
Yeah, I'm sure.
I just want to remind everybody about that. But no, I think the important thing is, I think you always need to do something you're passionate about, because whether you're going to excel at it or not, it's just going to animate you and give you fuel from another source, which is much more powerful. So I saw early on that there was a huge trend in alternative investments, that was something I really wanted to pursue, because I liked it, and I also saw that there was a lot of growth avenue there, which was continuing already from kind of the 90s and early 2000s when it really started. And so that really brought me into that industry.
Right.
And then I followed into Asia, because I was seeing that Asia was kind of the area where there was the most growth, worldwide. It's home to 2/3 of the world's population, and still has today the highest GDP growth, from anywhere else in the world. And then I realized that the paradigm was shifting, as I mentioned before, and that we had to kind of reinvent ourselves. And I think what and at least that's something which animates me a lot, is to say, well, how can you constantly be reinventing yourself? And I think that's also what a lot of, I would say, sustainable family businesses either try or sometimes even have to do, is you need to constantly reinvent yourself.
Right.
The world is not basically moving in a static way. So in order to remain in the game, you constantly need to adapt, evolve.
I think it's a wonderful lesson, and I think we've already learned a lot in this conversation.
I want to turn to the floor, but before we do, just take that in for a bit. This is a family that's been around for 500 years in this country, 150 or 200 years as an industrial family. Constantly that idea, generation over generation. Don't rest on your laurels. Don't take things for granted. Innovate, see where the market is going, see where the opportunities are going, but be passionate about what you do and excel. I think that's a wonderful set of conclusions. So I want to thank you first, and then we go to questions. But thank you to all three of you for sharing your wisdom with us today.
Thank you for having us.
Pleasure.
Thank you very much. Thank you.
And now the light turns to you, to all of you, and also the mic. Let's see if the mic works on the students. It's a bit of a lottery today. A first question I want to see is Nicolas in the room? And you can tell us who you are and what you study at the EU, perhaps where you're from or where you're going.
Of course.
And then your question.
So my name's Nick. I was born in Munich, but I grew up in Lausanne, so not far from here. I am currently in the Communications and Public Relations Bachelor, since that is something I've always been interested in. I appreciate the opportunity to be able to ask a question. This is very, very nice, very new for me. And for my question, I was wondering, with the emergence of AI these days, what would be some of the challenges and some of the opportunities that would arise in a privately owned, family-owned bank such as Syz?
Thank you. Who wants to take that?
I'm happy to take it. So I think AI is going to affect all of us. I think it's not just going to affect, family businesses. I think artificial intelligence, it's been a word that's been thrown out, a lot. Most of what has been done in the past, it was nothing really to do with artificial intelligence, but just what we call machine learning, or basically having computers being able to compute, data a lot faster and producing what we call smarter ideas. I think you've all read in the press recently what some of more advanced AI technology can do, like ChatGPT and others. I think what it will enable is we as humans to work in a more efficient way. Now, there might be an overlap where it's going to replace entire work streams of workers, just saying, well, we don't need that handwork anymore. We've tested actually even within the bank. I have a colleague which has started his own fintech company and has applied it to replace even relationship managers, making them completely obsolete. You don't even have to recommend any kind of investment ideas or services. The computer basically does it for you. The reality is that you need to adapt and embrace it. There's no point of saying, that's technology is going to die. And that's why I was saying before, you need to kind of adapt, evolve, embrace, and see how that's going to benefit you as a company. I think one of the things AI cannot do yet, or at least solve, is certain things like jobs like hairdressers. There's no robot today who's going to take care of your hair, or even if they would, I wonder if any of you would actually like to try it out. So I think you need to figure out and say, okay, well, how can that technology really enable us as humans to evolve? I think one of the things which has not helped us, and actually we see it and productivity is actually going down, is people are doing more and more multitasking. Our brains are not wired to do that. Computers are. And I think if we can actually take a step back and take the creativity of what actually we humans can produce and actually think, and use a different side of your brain. We're not going to, that's a whole other topic probably we could talk about how your brain functions, with different stimuli. Then actually you're going to be able to produce, a lot higher output. So we believe, we think AI is fantastic. It's going to be able to make, I think, a lot of our current, jobs easier, but you need to be able to embrace and see how you can apply it, rather than saying, this is something which is going to completely, destroy our industry.
Excellent.
Thank you very much.
Yeah, thank you. And I appreciate that reflection also on that our brain is not wired to be multitasking. I think if you haven't found out yet, I'm sure you will all find out in the next few years how hard it is to truly multitask. I think we can go to the next question, and if I'm not mistaken, we've got a few more questions. Is Yannick also in the room? Yes.
Hello, I'm Yannick. I'm studying a digital business management bachelor. Thank you for sharing your story, family story here today with us. You speak about finance with so much passion. It was actually interesting. So, what challenges did your firm face when you recently implemented the digital asset services management?
So when we developed digital assets?
You recently implemented digital asset services in the group.
We can share that. I think the hardest thing when you think about digital assets is more, I would say, the reputational risk, or how you're actually perceived. The big problem is today, for one of the reasons why a lot of banks do not implement or offer what we're offering today as a group to custody, trade digital assets, exchange them, pledge them, it's because there's no real regulation around it. Today it's not considered as a security, and therefore it becomes very hard even for regulators to understand, okay, how are we going to deal with this? What we've tried to do is take it the other way around, is to say, well, listen, this is an unregulated world, and we want to give stability to it. So we want to reassure people with the fact that we are a regulated entity, with the fact that we're just not going to run away with coins and whatsoever, and that we have actually enough assets to back any kind of deposits, to give people confidence in that. And so I think what needs to happen, if the industry wants to continue in digital assets to evolve, it is going to basically fulfill the basic principle of decentralized finance, which is, okay, you all need to self-regulate. And I think the more we actually progress, rather than having central regulation from people saying, okay, this is how we're going to do it, you're going to have more and more players come into the space and say, okay, we need to give self-regulation, but these are credible players who want to prove that they are able to do that and avoid, debacles like we've seen, in the last year.
Nicolas, do you have any additional thoughts? You've also been involved, of course, in the setup of the digital assets.
I mean, for sure, it's already difficult to regulate the independent asset managers right now, as we've seen last year. Lots of regulation coming through. I think we're still a long way away from having, the decentralized finance, and I think governments are looking into this. The SNB are looking into
the Swiss National Bank.
The Swiss National Bank are looking
interesting,
into
a centralized agency.
To look at crypto and digital currencies. So, but for sure, the adoption rate it's just a momentum. So either you accept it and you look to be part of it and to learn from your mistakes, because that's all about, being entrepreneurs is you fail, you learn, and then you as Marc said, you adapt. And I think this is the risk that you have to take in order to remain relevant and to continue to add value. And I think the industry is going to go through that. And I think the corrections that we had last year was healthy, and you can see that it's rebounding, but people are learning as well. So I guess that's gonna just be part of the journey.
Yeah, I guess that's true. Although I'm sure there's a lot of people who would not think it was healthy for them to go through that correction of the market. Maybe I can ask to the people in the room, just to get an idea. How many of you have actually owned, traded digital assets such as cryptocurrencies or NFTs? Just raise your hand if you've owned or traded any type of. Okay, so we're looking at about a third.
Yeah.
Is that what you find with people of that age? That it's about a third, or is it more or less? Or are these people more?
I think it depends on the geographies and obviously access to information. You'll get it in Asia and the US. It's probably a lot more, right? And in Europe, people are probably a little more conservative.
Yeah.
And so
Eric, have you
less.
owned or traded cryptos?
Yeah, I've owned cryptos. I don't trade it because it's I mean, I trade it, but I don't. I have somebody who looks after my wallet at the bank, right? But so I buy and sell, and I think, look, there's a very savvy, clever investor for whom I have a lot of respect, who still lives, called George Soros.
Yeah.
And he's one of the big, great hedge fund managers of this world. And George always said, if you want to understand how something works, at the time it was just stocks. This is what goes back in the early 80s. He said, just buy, 20 or 30,000 of it.
Yeah.
Because then you have to look after it to try to figure out, what is this company really doing? How does it really work? And that is what I did. Unfortunately, I didn't do it early enough. but that's the only way how to do it and how to follow something. So yes.
Okay. I want to turn to the next question, and I believe we have, if I'm not mistaken, Mitali here somewhere. Is she in the room?
We have Oriana.
Oriana, okay. Oriana, go ahead.
Hi, my name is Oriana, and I'm also in the Bachelor of Communications and Public Relations. And taking into account the constant evolution the world is going through, and mostly the economy, what is your vision for Syz for the Syz Group in the next 5 years?
Well, Eric, do you want to take that? Are you going to answer the next 5, or the next 50, or the next 500?
Well, I don't know about 500. I'm not going to be around, that's for sure. But look, yeah, I think it's an important question also, to give visibility to our people that work for us, where do we want to go? And I think a lot of groups and companies give, financial targets. We want to grow by so much per year. Or in our business, we want to have so many assets. And so I think and if you say to, I'm 65, I don't know when I'm going to retire. Doesn't look like I'm going to retire very soon, unfortunately for these guys. But I give them a lot of freedom, and until they're probably going to push me out. But so, as far as I'm concerned, and the legacy I can give, and I think that is probably the most important task, and what we want to do for the next 5 years is, we understood very early on that, in particular in the financial industry, which is a service industry, the individuals are extremely important, because the structure of the service industry is very flat, contrary to manufacturing. And so
you got to explain that, though.
Yeah,
what do you mean with flat?
Flat means, there is not a lot of hierarchy, and people need to all work together. So the people in Geneva need to work with Zurich and New York and so on and so forth. The business need to cooperate with each other, the business lines. That is very different than when you run, let's take a car manufacturer. The guy in Detroit, frankly, probably is never going to talk to the guy in Germany. It's only that very top level that, people this is why it's very like this, but below, people don't talk. Pyramid. With us, everybody has to talk with each other. Mm-hmm. So the attention we got to give to the individual is much bigger. And so the only thing that is important to me, and where I want to take the Syz Group for the next 5 years, is that as a group in the financial business in Switzerland, we become the employer of choice. Because of our mindset, because how we work, because how we treat people, some people might want to work for us and some not. But the people who are the right people to work for us, that basically these people are going to queue up to work for us. And I think that is where we want to take the group. That is what we actually want to achieve. And if we do that,
the reason is, yeah.
If we do that, then growth is going to come by itself.
Because
people are going to do the right thing. People are going to have the right ideas. They're going to do the right things. They're going to work together, and so on and so forth. But you cannot dictate that to people. Say, you got to work with these people. Yeah. You got to do that. But if we have the right mindset, it's going to happen by itself.
Yeah.
It's going to be the growth is going to come through the excellence of the people. They're going to make it happen. Yeah. We can't dictate it. Mm-hmm. So that is where we want to take the group, to really be the employer of choice in our sector.
But I think it's important to understand that in our industry, what you can kind of call COGS, or input cost, or the largest cost of a service organization is people.
Yeah. When you say COGS, you don't mean COGS in a machine. You mean
basically the cost of what we call goods sold. Like if you say, if we're a car manufacturer, and the thing is for us the most important value is our people. It's not about sourcing great material from China, or trying some new crazy technology, or inventing the iPhone. It's not about that. It's about saying, well, how can we hire smarter people? That's what we try to do every day than ourselves, to make sure they come with the next best idea, and and then find out the next innovative trend, and make sure our clients continue to outperform and are happy, etc.
Yeah. Well, at least your father succeeded at bringing in the next generation of talent. So he did that well.
Time will tell.
I think we've got another question. Jose, you want to introduce yourself and then ask your question?
Hi, my name is Jose Eduardo Samayoa. I'm from Madrid. I just moved to Geneva 3 years ago, and I was developing myself in finance, specifically in a private equity back in Spain. Back in time, now I'm working in the hospitality world. It doesn't have nothing to do about it, but it's cool as well. So my question, first of all, I want to say thank you for you two. And my question is really specific. What is your biggest potential, your biggest strength? What makes you unique? What is the Syz Group that makes unique and different from different banks here?
That's right. I mean, you've got the nice view, and you've got the nice air, and you've got the good safe. But what makes Syz unique today?
I mean,
Do you want to take that?
Yeah. Well, honestly, it's and Eric touched upon it beforehand, but it's this being family owned. You know, it has a huge advantage. We have long-term perspective. We talked about 50, 500 years. How many companies can look at 50 years? And this is the perspective that we try to take when we make big decisions. We commit into something. We don't look at, the P&L at the end of the quarter, or the shareholders will, it's us. So the fact is that everything we do, we try and do it to move forward, to add value to the clients, to add value for the employees. If you get the right people, it's then a virtuous circle. And I really think that this is the biggest advantage that we have as a company.
Sounds like you've got your challenges carved out then as sons to make sure that there's a next generation of Syz. That's the biggest.
We'll see that. Yeah, that's small.
Very small.
No, but I think just to comment on what Nicky says, I think it's very important. And I think that is probably would differentiate a lot, if not most, family businesses. First of all, you can trust each other blindly because you know each other so well. So you know your blind spots, you know your strength, you know your weaknesses, which is really important. And what that does, there's no politics. In most enterprises, there is politics to some extent. And, behavior starts at the top. Attitude starts at the top. So if you have that at the top, it just trickles down. And I can see, with us, there's no politics.
No.
And when I hire people, I always say, with me you have a good side and the bad side. The good side is you know exactly where you stand. The bad side is you know exactly where you stand. So there is no politics. There is no hidden agenda. No. And I think in family businesses, that is really what makes family business very, very unique.
Well, except for the British royal family, I think that's a different cup of wine.
That's more like a Pandora box.
Yeah. So no William and Harry in this family. Do we have any final questions? Yeah.
Thank you. We have had a talk before from Syz, from your CIO, and I've been following your bank very closely since. And related to that, I had a question about sustainability, more on the fact that, what are the biggest problems you foresee in terms of implementing sustainability, as well as the banking services that you offer to your clients.
Excellent. Let's take that one.
I can start that. So the problem is with sustainability it's a bit like with everything. It's what's the framework, right? So I can give you so many examples where you think you're actually doing something good, and you probably did it yourself this week and yesterday, etc. I'm doing something great for the planet, and in the end, it's actually not good at all. And the problem is, I think, is a question of how do you measure it, and what's the right framework to measure it. And so we took a conscious decision, as a group, and I think Eric can elaborate on it, where just following frameworks blindly for the fact of ticking boxes and making sure you get in there is absolutely useless. And some of you might have read in the press how some even have got now scolded, that got fines for it, etc., because you're sending off the wrong incentives. So we said in order to basically be a sustainable group, you need to live it. So you need to think, okay, what are we actually trying to do which is making a positive impact from a governance perspective, from an environmental perspective, social, etc. And I think that's where it starts. So, and it's the same, if we already do it at our, corporate level, in terms of how we try and live it, and actually feel ourselves that we're actually doing something, not just because we think it's good and we have to tick the box, but we're actually seeing it makes a difference, and because we want to actually lead by example. And especially for family businesses, thinking of the next generation, you want to be mindful of, well, what kind of example am I setting? If you live through that, right, and then, your colleagues and your employees, subordinates, everybody actually see that, and they start to say, actually, I can live that through, you'll have a much more positive impact. Same as when you're actually investing. We've invested in companies where, yes, they were not sustainable, but then we tried to make them sustainable, right? And that's the whole idea, to actually, make it better. And I think that's the general philosophy we have. And everything we do, whether it's in buildings and how we've suppressed plastic and cups and all that, they're all nice things. But the reality is, I destroy all that if I sit, sorry to say, can I say ass in the plane, right? I mean, Switzerland would be the greenest country in the world if we would basically not travel anymore, not take the plane. So I think you have to reflect, on these kind of.
But have you found the framework yet? I mean, like for example, there's now all these financial alliances that say we're going to be net zero in terms of the portfolio that we finance.
But again, the problem with that is it's a framework, and then the framework gets thrown out of the window again. So look at how many countries have actually signed the chart and now basically receive it and say, oh no, sorry, it can't be net zero emission. And it's like when you say we're not going to produce as a car producer any basically carbon emitting cars anymore, etc. I guarantee you cannot guarantee anything, but in a few years they'll come back to that and say, oh sorry, it's not possible. What you need to be able to measure, and that's a true measure, that's what we try to do, is like, can we basically make incremental changes year on year? Can you actually show that you're continuously improving? Because if everybody thinks like that, you're actually going somewhere.
Right.
And as the more you go into that direction, the more data you'll accumulate, and the more actually they can say, okay, now I can start building on frameworks. The problem what we're doing is we're already building frameworks now, which we don't even know whether we can fulfill them.
Right. So you're doing incremental changes in your own operations, and I get that, and that makes sense. But what about your finance portfolio? If you look at the loans that you give, do you screen them for, is this a green investment?
For sure. Yeah. We've got data screening to rank companies and on how they do incremental changes and how they improve, or what their footprint is. But at the end of the day, we can provide that, but it's not a lot of clients actually then say, well, I want a total green portfolio. And I think there was a huge trend around, just looking at the E,
sure. Meaning the environmental.
Yeah, the environmental aspect of ESG and sustainability. Whereas, it's very good marketing, but there was a huge amount of greenwashing, as Marc says, because it's, you can show something on the environment and zero carbon footprint. But actually, a governance has much more impact on a company. How are decisions made? How do you structure a board? How do you build that framework? Right. What do you look at on the social side? I don't want to sound like recurring, but it's diversity on the board and on the higher ups level creates a huge amount of positive friction and good ideas. A lot of companies rather look at the environment side. So you always need to look at these things with a pinch of salt and say, how is it going to add value to our portfolio? And this is, our CIO and the whole investment team look at it in terms of, generating alpha and looking, does it really add value? And then if it does, great. And if people want to have really a segment which is sustainable, we can offer that as well.
Yeah, a rather pragmatic view. We've run out of the prepared questions.
I just wanted to add one thing, which I think is important for the students. You might not see this way, but ESG is a political distortion.
Please explain.
The politicians invented ESG or took that for their political ambitions. So as Nicolas said, it's about environment, about social and governance. And the environment you can draw, you can imagine. Can you please draw me governance? Very hard. But it starts with the governance, as Nicolas said. And we always tend to forget that. And this is why, as Marc pointed out, There is, what is the framework? Just to give you an idea, what the politicians want to do to have a carbon-free Europe, have no more cars by 35 that are not dependent on fuel. It's impossible. We don't have enough electricity. We got to build, I think something like 56 new nuclear plants for that by then. I don't know how they're going to do it. Do you know that a Tesla, you got to drive it 70,000 kilometers for the CO2 footprint to be zero? And so on and so forth. This thing is a political buzz, a political distortion. It has not been thought to the end. But it's very, populous, and people talk about it and so on. Yeah. And I think, maybe that's sort of my way to look at it, if you are a good entrepreneur, if you are really want to take your company from one generation to the other, you have to be ESG by nature. You have to look after the environment. Because no matter what you say, but you have to make sure that this thing is sustainable. And if it's not sustainable, you're not going to be able to pass it on from one generation to the other in the business that you're doing.
Yeah. So, and I understand that you can say that, of course, because you have those many generations behind you. And you said, well, we understand what sustainability is because we have been sustainable. We have sustained ourselves throughout these generations, and therefore we've also sustained society. I want to perhaps turn to any last questions from the audience. I think we're now at the unprepared part of the conversation. So if you want to go ahead, please do introduce yourself and tell us your question.
Yeah, so my name is Thomas. I'm from Italy. I'm 19 years old, so pretty young. But so my question to you would be, so actually, what would be your suggestion or advice for life lesson to students? Yes, we're young, but still in working experience. I don't know, for example, internships or go gather this knowledge in the working experience actually to be able to perform well. Actually,
excellent question.
Thank you.
You want to give it a try?
Okay, so if I understand right, is what would my advice be to you? What you should do after finishing your studies, right? Okay, it's a good question.
It's of course, it's a good question because you started working at 19.
So, it's a good question, and I've been asked that question many times. And I say, look, don't do what I did, which is not study. So you have done what these two have done is, buy intelligent time, pack in your backpack with as much information that you have, because now you have the time to do it. Once you start working, you can't do that anymore. So you're doing the right thing. You're on the right path. Once you've done that, I think all of you, probably it has sharpened your mind of what you like to do, but probably more what you don't like to do. So that I'm sure I don't want to do. So that's already, you can take it out of the way. And there's probably a few things that you think, I really like to do that. And what you should try to build on is on your strength, not on your weaknesses. We humans have a tendency to try to get better at what we're not good at. But you're much better off in trying to go from what you're good at to be excellent. It's less effort and it gets more results. And each one of you knows where you're good at and what you actually like to do. So try to do something that you like to do, not something you don't like to do, that you feel you have to do. So whatever you're going to do something where you think, actually I like this area, I think I can be good at it because, I have sort of feeling for it. And then, that's going to launch you. And then, life is full of surprises. Eventually, after a few years, there's an opportunity and you take that. And life is full of opportunities. You just have to grab it.
Yeah. I think there's a Japanese concept, isn't there? Ikigai. Do what lies at the intersection of what you're good at, what the world needs, and what you like to do. Final thoughts from the two of you. Perhaps Marc, advice for the students as they go into their life?
Yeah, I think, listen, it's always hard because obviously you say, it's easy to say, do what you're passionate about, etc. And then, you you're going out to the job market and it's harder than ever. And by the way, it is much harder than it was 30 years ago. So it is. I know how you feel. But I do think that if you do something you're passionate about, it will be much easier. So I always say to people, either do something you're passionate about and you basically, really enjoy what you're doing, right? And hopefully you also get, a good, pay and experience out of it. Or if there's not that availability, something you're really good at, and at it you excel, and it buys you some extra time until you actually can do something you're passionate about. But I would do either or.
How about you, Nicolas?
Okay.
The final thoughts after those two wise reflections from you.
I guess my advice would be in this, we're in a very fast-moving paced world, is to not be in a hurry, because I think that's gives you the ability to just take the time and posture on experience, on failures, and because in this fast-paced world we have the impression that everything needs to be delivered very quickly, on the career, on the results. And it's wrong. You don't have to be dictated by what's happening around you or by what's happening, in the digital environment. So I just would advise, take your pace and take the time and don't be in a hurry.
That's an amazing piece of advice, and it also shows you that we all learn, because I think it wasn't even 15 years ago that the mantra in the business world was move fast and break things. And you're saying with time, we've learned that maybe it's actually not too bad to go a little bit slower, and perhaps also not to break things. I don't know about that. Wonderful reflections. Thank you all again, and thank you also to the audience, also the audience that joined us online for this conference. I think it was really amazing to get back together. We'll of course be able to talk some more in the reception area. So take this opportunity to connect again with each other. And we very much look forward to our next event. And one more time, a big thank you to the Syz family for joining us today. Thank you so much.
Thank you.
Thank you very much.
Thank you.